Talk Money to Me is a financial podcast produced by TransGlobal. All opinions expressed by the hosts and guests are solely their own opinions and do not reflect the opinion of TransGlobal. This podcast is for educational purposes only and should not be relied upon as basis for investment decisions.
Hey everybody, welcome to Talk Money to Me, where we talk about money and how it affects you. I'm your co-host Jonathan, and I know a little bit about finance.
And I'm your other co-host, Tracy, and I know almost nothing about finance.
We have two wonderful guests with us today. I'll go ahead and let them introduce themselves.
Hey everyone, my name is Daniel and I'm a financial advisor.
And I'm Oriana Chan, and I am a mortgage loan originator.
Ooh, originator. Like the Terminator.
But not.
She terminates all her loans.
So today we are going to be talking about mortgage. Do you think you guys would be able to go ahead and first start off with kind of the groundwork of what a mortgage is?
Yeah, a mortgage is just like any other loan, but it is a loan specifically for the purchase of a home, right? And the way I like to think about the terms or like, I guess the structure of a mortgage is similar to what people are more familiar with, a car payment, right? You put some money down and take a loan to buy a car, and then you pay monthly. You pay a little bit of a principal, which is whatever amount you owed to buy the car or the house in this case, and you pay interest for having borrowed the money from an institution.
I know zero about mortgages, and then I know like 0.1 about car loans. So I recently learned that like all those commercials that yell zero down, what they mean is you don't have to pay any money up front. So like a down payment is something that like they force you to pay X amount before you, and then the rest you can take out in loans. Mm-hmm. But there's an amount that you can't not pay. Mm-hmm. For houses, is it possible to have zero down?
Yes. Actually, VA, Veteran Affairs, has a program with 0% down payment. But we also have low down payment programs as low as 3% down.
Right, but 3% down of $1 million is more than I've ever seen in my whole life in the bank. So a mortgage is just a loan.
Yes.
And it's specifically pertaining to houses.
Correct.
I'm just going to start throwing out terms that I've heard in relationship to buying houses that I've been pretending my whole life that I understand. So like escrow, amortization, what are those?
Let's start with escrow. An escrow account is an account that you build up after you get your mortgage loan for property taxes and insurance.
This is not an account that I own, but it is an account that gets opened when I decide I want to make an offer or I want to purchase a house.
It's under your name, but you can't touch it. Once the money goes in, it's meant only for property tax and for insurance.
So instead of you paying, the lender pays it.
But why doesn't the lender just pay it? Why do they have to open an account under my name?
Because they have to have a way for you to pay them back for paying it for you.
Huh?
So what they do is they open this account to collect the money from you, the monthly payments from you.
Oh, so when I make my payments or like the principal payments for my mortgage, I'm paying it into this escrow account.
Yes, a portion of it.
Okay, that makes more sense. And then they take whatever portion comes back to the lender, but then they also use that account to pay off my taxes and my insurance.
Yes.
An escrow account is a middleman it's an account between you and your lender.
Oh. Escrow is an adjective.
I'm not very good at linguistics.
Okay, but you're saying like you can have an escrow account, which basically means it's an account that acts as a middle person.
Yes, correct.
Right? So it's describing the account.
It's describing the account.
Okay.
Got
and
it.
then if you open escrow, then it's like describing the process of going through a third person. Mm-hmm. To
yes, escrow
verify
will
all
be the
things.
third person.
Okay, then. So what is amortization?
Amortization is a very fancy word that means the process of paying off a loan. Amortization is literally just the process of paying off your monthly payments and the length of how long you have to pay for. So say your 15 or 30-year term.
Okay. And then this is just me being a little bit cheeky, but is there a reason why there's so many fancy words in the finance world?
Yeah, so our jargon in the financial world is kind of just created to, I feel like sometimes it was created to make a relatively easy topic, or a essential topic, I should say, sound much more complicated than it needs to be, so that people in the industry sound a lot smarter. I partake in this financial jargon all the time, and I sound like a genius amongst my friends. But literally, I'm just explaining how car payments and how mortgage payments work. But all jokes aside, yeah, it's kind of like a slang amongst professionals to get the message across a couple words quicker.
Okay, I could get on board with this. I could buy a house now. How much money do I need in my bank?
Well, so interestingly enough, Tracy, while you can buy a house, I personally might not be able to buy a house, since I don't think I make that much money. So then my question is, what happens for people who don't make that much money and, can't even necessarily afford a loan?
Well, that's why we have to see your income. You could also add someone else to the loan.
Oriana, I know you had mentioned that you're a loan originator. And
Yes.
so I was wondering, where in the mortgage process does the originator come in, and where in the process does the loan officer come in?
They're the same.
Okay, so just
They're the
two
same.
different terms for it. Okay.
Yes. So to make the loan happen, I check the credit score. I make sure they have enough money for down payment. And I check their income to see what they could actually qualify for.
So I'm a little bit confused because I don't usually think of, when I buy a house, I don't usually think of getting in direct contact with like a loan person. I think of going through a real estate agent. So can you talk us through what that process kind of looks like? Because for me, I'm shopping. I like this house.
Oh, yeah.
And I don't have enough money to buy it. But it sounds like you're saying a lot of it goes through the loan officer or originator. Sorry.
Okay. Buying a house in like the 1980s, we went to see whatever house we liked, and we just chose the house, and the realtor made it happen. Well, it's not like that anymore. Now, if you go to a realtor, the first thing they're going to ask you for is a pre-approval letter.
What?
Which means that you already saw a lender, a bank or a broker. They pulled your credit. They ran all the numbers. They saw your income. And they could and you actually qualify for the house you're looking at.
So you can't even look at a house
You can
until
look
you've
at house.
qualified?
You can look at a house. There's a lot of open houses on Saturday and Sundays. And you could go on Zillow. But if you really want to narrow down something that you're looking for, you usually contact a realtor.
So it's kind of like being a window shopper. That's when you go into the open houses, versus being a serious inquiry buyer. And that's when
Yes,
you get
correct.
this pre-approval letter.
Correct.
Okay, but what if I don't know any lenders? What if like
You can
I
walk
usually-
into a bank, your local bank, usually where you have your checking accounts.
Oh, and basically it's like going to my professor asking for a letter of rec. I just go to my bank and say, I'm thinking about buying a house. Can you run a report? It's like printing out my transcript from college.
Something like that. You would give them permission to run your credit. You would bring them your bank statements to show how much money you have. You would bring in your tax returns and W-2s and check stubs to show that you're currently making this money and you have
So
in the
any
past
bank
2 years.
works?
Yes.
Or better yet,
Oh.
you could just call Oriana.
Yeah. You could call me.
If anyone out there is looking to buy a home, if anyone's looking to buy a home and needs pre-approval, Oriana's here Monday through Friday.
I work
Anytime.
weekends too. I'm a hard worker.
Ba, 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 sa, yi. Ba, 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 ba.
That does bring up a good point, though. So let's say like you aren't very trusting of big businesses for some reason or another. Is there a way to get in touch with a loan officer other than that? Is there any sort of like personal connections that you would be able to try to find?
Usually everybody has a family member that's a loan officer or a realtor.
So you could theoretically talk to a realtor, and they have the relationships usually with like a loan officer or a loan originator, and they could recommend one to you.
If you need a realtor, you could contact me because I know a lot of good realtors too.
All right, that's 1-800-ORIANA.
So it's a bunch of friends, it seems like, except that you pay these friends. But that's a different kind of analogy.
No. What are you talking about? If your friends offer services, of course you pay them. You don't do pro bono. That's
True.
That's a PSA for all you listeners out there. Don't take advantage of your friends' skill sets. They get paid to do what they do. They paid for that degree.
Yep.
The training.
Mm-hmm. I think the thing that I see most often in the news is about mortgage rates. Either they're increasing or decreasing. Is there a reason why they fluctuate so often?
Sometimes the government will step in and
Yes.
lower rates for a specific reason or another. For example, in 2020, we saw interest we saw in the investing world, we saw the 10-year Treasury bond fall to an all-time low. That's because the government, the Federal Reserve, wanted to make borrowing as easy as possible for big businesses and for individuals to kind of keep the blood of the economy pumping during the pandemic. And because of that, inadvertently, it lowered car loan rates, mortgage loan rates. All of these rates fell with the bond. So a lot of people during that time were looking to buy a home or refinance, take advantage of that low rate period.
I mean, I'm going to be quiet for a few seconds while I Google Treasury bond. And hopefully don't get James Bond. No, I think on a macro level, I can sort of understand how this is all related to each other because it's just a bunch of people saying that I owe you to a bunch of other people and vice versa. And so there's a level to which it's really just all fake and it could all come crashing down if it's not balanced well by people who actually know what they're doing. But also at the same time, it's really confusing to think about because if on a practical level, like I would think that the mortgage rates are determined by the lender. So it seems weird to me that something like mortgage rates could be so heavily impacted on such a large scale all the time by our government.
When the Federal Reserve lowers their Treasury bond rate, it doesn't like automatically lower the mortgage rates. I think mortgage companies, what they do is, lending companies, what they do is they kind of like look back at the 10-year Treasury bond and it's like, hey, look, the Federal Reserve is willing to pay 1% for debt, right? We can't make money off 1%, but maybe we can make money off 1.5%. So they use it kind of as a benchmark, as like a rule of thumb.
That makes sense.
Right?
Okay. It's like if most people are selling a pair of jeans for $50, like you're not going to sell your jeans for $20 or whatever. It's just a reference point for everybody to set their rates.
Yes.
Essentially, yes.
That's helpful. Thank you. You mentioned earlier locking in rates. What does it mean to lock in a rate?
It means that you're going to lock in for this time and we have to finish the loan in that amount of time.
So it's like setting a deadline.
Yes.
Finish processing the loan or finish paying off the loan?
Finish processing the loan, paying the loan, the whole process.
That makes sense. And then once the loan is processed, then you keep that rate for the entirety of the amortization process.
Right. Either 15 or 30 years.
Do they still do like variable loans for mortgages?
Yeah, they do.
So would you still lock rates in for variable loans?
It's not attractive right now.
I feel like it hasn't been for years.
Yeah.
All I hear nowadays are like 15-year fix, 30-year fix.
Yeah, because it's so low. You're never going to get that. I don't think you're.
Just lock it in as soon as possible. As low as possible.
Yeah.
I do feel smarter though, because I understood most of that conversation. Whereas I feel like a week ago, if you had that conversation in front of me, I would have chuckled and pretended to know.
Smiling.
Yeah, mortgages.
Variables, not for a while. Am I right?
Let's say that we go through this process of trying to get a mortgage. And Similar to credit cards, you can apply for credit cards, and for some reason or another, you get denied and it's not approved. With mortgages, do you have a chance to try again? And if so, what are the steps or, I guess, extra rules revolving around taking another shot?
It depends why you got denied. Was it a high debt ratio? Or did you have late payments in the past? It depends on why. You could always apply again.
Okay.
You could always clean up the credit. You know, if you had bad credit, you could always add someone if your debt ratio was high.
Okay. I know that with like getting your driver's license, if you fail the first test, you have to wait at least 2 weeks. So with mortgages, do you have to wait a certain amount of time, or it's just like once you fix whatever they said was wrong, then you can apply again?
It just depends. If your lock expired, I know that. If your lock expired and you decided not to do it, and then the next day, I want to do it, you have to wait 30 days with the same lender. But if you go to a different lender, we don't care.
And with that, we'll go ahead and draw this to a close. Thank you so much for coming to speak with us today. Hopefully you've learned a little bit more about finances. We'll catch you at the next episode. Take care. Bye.
Bye.